Justin, talk a little bit about the demand that you've seen from retail investors for options, and in particular index options, since the pandemic that has created the need for this product.
Thank you very much for having me on the show. I really appreciate it. The demand continues to grow. A lot of people thought that this might be just a pandemic one-off, but I think people got introduced to options, a lot of new people during the pandemic, and they're more popular than ever. Overall volumes on all the major exchanges are at record highs this year. And then just on our platform, we've seen the users using options double just this year. Those are the equity options. So, we want to offer as many choices as possible to our users. Right now that includes equities and equity options. And most recently, with this collaboration with the CBOE, we're now offering index options. And we want to do it in a way that makes it affordable to those users. So we're waiving platform fees for a limited time and charging 50 cents a contract for them to do so. And the real interest in the index options is you can't directly trade indexes. You can't trade the S&P 500 directly. So being able to trade options on these are great. And they also have a lot of great advantages like cash settlement. You don't have to worry about being assigned an underlying, for instance, if you were working with commodities. And it also has favorable tax treatment, 60-40 tax treatment that includes 60% long-term capital gains for a lot of users.
Justin, I'm really interested in learning more about who the retail trader is who's dealing in options and how that differs from the people who were zealously trading meme stocks during the pandemic who are on those Reddit boards. Is it the same person, the same trader?
I think maybe there's a few of them. I mean, there's this image of these retail traders, that are super young and they're sitting in their mom's basement trading. And I'm sure there are a few of those, but our average trader is much older, closer to the late 30s, early 40s. They've been around trading a long time. They've been trading stocks for a long time, and a lot of them want to get into options. And so we're trying to educate them along with CBOE. We're having an event tomorrow at the old post office here in Chicago with the CBOE, where some of the CBOE's derivative experts will speak to some of our VIP users about how to use options, how to use index options in particular. These users are using these options for a variety of different strategies. It's not just this idea that we're going to get long calls and hope the market goes up. They're much more savvy, and they're using a lot of tools to get educated about how to use these options.
Well, that's what I'm curious about too, particularly as it dovetails with your platform here, because it did seem like when they kind of loosened the rules and allowed more of the retail set to participate in this, it really was just that. People either just going long a call or going long a put with no real understanding here of how to hedge those positions or even just how to write options, if you will, as a way to maybe potentially make income here. Is all of that baked into the platform?
Yeah, and so what we're really trying to do with this platform is we want our users to make money. That's how we keep them, and to do that, options are complex product, and we really need to train them. And that includes educational videos and also paper trading. To me, that's the greatest way to get started trading anything, is to do it virtually. Do it with the fake money. It makes it much easier when you finally go to do it that you've already done it virtually. And so to me, that's a way that we get there for a lot of our users, get them comfortable in understanding the risks, because options, depending on the strategy, can be risky, but some strategies are much riskier. Like you said, those short naked calls could be much riskier than a covered call. So really explaining what the different strategies are to our users is so important, and then the users are able to use it in a much more responsible manner.
I am curious just about investor sentiment overall here. I mean, I know you guys have been conducting a lot of research into kind of the mood music, if you will, out there. When it comes to just all the volatility that we've seen this year and just some of the uncertainty around the economy here, has that actually sapped some of the optimism or at least some of the conviction that people have to even just be a participant in the market?
Well, I think it's two-sided. We do survey our users, and their number one worries are inflation and the economy. And we can see, I saw these numbers yesterday, and inflation's falling, but ask the average person on the street, they might not feel the same way. So it's sapping some of their psychology, but at the same time, they feel like investing is one of the ways that they can get out of this inflation trap, that if you continue to invest, continue to trade, it's a path to financial freedom.
What kind of turnover is there in trading these options? I mean, how do you see it picking up, especially as interest rate volatility increases?
Yeah, I mean, as the interest rates change, the trading's going to change, and so there is a lot of interest in the shorter dated options, and that's been the case for quite a long time. But there are people that are getting more interested in some longer dated options. It really depends on their strategy, and as they get more educated, I think they get a lot savvier with the strategies they're using in the type of trading. It's not necessarily just going to hold it for 10 minutes. They're going to get into a trade and a swing trade, and it's based on a number of fundamentals and technical analysis. It might be trading around earnings. There's lots of different strategies that now go into it.